Are you a high-performing real estate investor who's looking to further elevate your performance? If so, download our free guide, Raising the Bar, 5 Steps to Elevate Your Habits by joining our insider network at elevatepod.com. This guide, created by yours truly, has the power to put your transformation on autopilot and exponentially change your trajectory. Go get your free copy now at elevatepod.com.
Welcome to Elevate, the masterclass where we dissect the elements of exceptional achievement and lifestyle design with a focus on personal growth and real estate investing. Now, here's your host, Tyler Chesser.
Elevate Nation, welcome back. This is Tyler Chesser. I'm so thankful to have you here, and I am blessed and grateful to be sitting with Kent Ritter today. Kent is a phenomenal real estate entrepreneur, investor, and educator, someone who is absolutely completely down to earth, and also someone who's continuing to challenge himself. He's continuing to challenge the people around him. And I think he's going to challenge you today to expand and evolve, because really that's the key. And you're going to learn so much today about how really the best of the best make assumptions, how to invest like a pro, whether you're passive or active in real estate. You're going to learn more about how to make the appropriate assumptions so that this beautiful vehicle of real estate can serve you. Because guess what? It can be a double-edged sword. In some ways, obviously, real estate is a beautiful thing. It can provide passive income. It can provide multiple streams of income. It can provide tax mitigation. It can provide wealth creation, but it can also be, very treacherous if you don't know what you're doing. And so I think today there's a lot of education involved, and there's a lot of ways that we can integrate not only the principles of success in business, but also the principles of a successful growth mindset in terms of allowing this vehicle to serve our life and allowing really our life to be a fulfilling journey, because ultimately that's what it's all about. Let's live a fulfilling life. And Elevate Nation, my goodness, I'm so excited for this episode. You're going to learn so much. Elevate Podcast is all about mindset, mind expansion, and personal development for high-performing real estate investors. I'm your host, Tyler Chesser, and I am a professional real estate investor and high-performance coach. It is my job to decode the stories, habits, and multifaceted expertise of world-class investors and other experts to help you elevate your performance and lifestyle. Are you ready to take it to another level? It is time. Let's raise the bar. Before we dive into this episode, I want to thank you, first of all, for being here and listening, investing in your own elevation, in your own learning, in your own growth, your own expansion. But I also want to remind you that the best way to really get the most out of this is to pay it forward and share this with someone else. That's the fee that we ask. We don't ask you to pay 1 penny to listen to this episode or to watch this episode. We just ask you to help us spread the message of Elevate. Anything is possible for you. Anything is possible for any beautiful human being on this beautiful blue planet. So go ahead and share this episode with one person. Grab the link, send it in a text message, share it on social media, whether it's Facebook, Instagram, TikTok. I mean, my goodness, YouTube, share it wherever resonates with you. And we just want to thank you so much. If you have not done so already, we also ask that you please give us a rating, a review, and follow Elevate Podcasts on wherever it is that you listen or watch podcasts. It's extremely helpful for us. It's extremely important for us to continue to grow for your feedback. So we'd love to have your rating and review. So I just want to thank you in advance for doing that. I want to thank you so much again for being here. And I want to dive in. I want to introduce you to Kent Ritter, who is on a mission to create modern, affordable housing for America's workforce while empowering others to take control of their financial future through real estate investing. He is the CEO of Hudson Investing, and since 2019 has acquired 621 units valued at $51 million. Previously, Kent was a managing director with the multifamily private equity firm Birge Held Asset Management, which currently has over $1.5 billion in assets under management. Kent led a business unit focused on apartment acquisitions. Prior to his real estate career, Kent was a partner in a management consulting firm where he played a central role in growing the business to 95 employees and $30 million in revenue in 5 years. Without further ado, please welcome and enjoy this phenomenal conversation with Kent Ritter. Kent Ritter, how are you, my friend?
Doing great, Tyler. Thanks for having me on the show, man.
Man, my pleasure. I'm super excited about this. And of course, we are, just up the road from one another, but it's great to spend time with someone like yourself, obviously, who's pushing, who's growing, who's expanding, not only within real estate, but in your personal life. Before we dive into this conversation, if you were to describe yourself in the way that the people that know you best, the people that have maybe known you the longest, they know you the deepest, what would they say about you, Kent Ritter?
Man, that's a good question. What would they say about me? I think they'd say that, I think first and foremost, just, Kent's a good guy. Kent's a loyal guy. He's somebody that takes care of his friends. He looks out for people. He tries to bring other people up with him. I think that's kind of most important. And then I think they'd say that I'm somebody that, like you said, is always pushing to do better, always trying to do more. And I think somebody that, like a lot of my closest friends, you go back to, folks from high school, college, somebody that like they can be proud of what I've been able to achieve. I mean, it's what a lot of them tell me. So, I mean, it always makes me feel good if I can be somebody that, can show them that, you can do more out there. You don't have to just take the 9-to-5 route and do the normal keep up with the Joneses thing. So, I guess that if I could be a good guy and somebody that's, achieving a lot, those are good things.
So obviously to do that, you've got to not be a conformist, right? Because a lot of times, especially the entrepreneurial route, the investor route, and building a real estate business can feel like you're a little bit on your own, right? In some ways, it can feel a little lonely because, the herd, so to speak, is not, following in that path. So have you always been a bit of a, nonconformist in certain ways, or was there a shift at a moment in time for you?
Yeah, that's a good question. I mean, I've always been very entrepreneurial. I've from the beginning, as early as I can remember, wanting to be involved in business, and not like when I didn't even really know what that meant. And then, but wanting to specifically have my own business. And even before I knew what that business was going to be, I just knew I wanted to own my own business. And it took me a while to get there and figure out what that was. And I've had a couple of different versions of that along the way. But so I'd say I was always entrepreneurial. But I did the normal stuff growing up. I, played football in high school, kind of ran with that crowd, I was in a fraternity in college, was, finance degree, and kind of ran with those crowds. And, I did the normal college, like Big Ten, experience and all that stuff. But I just always had this entrepreneurial mindset. I always had this idea. Like even going into my first job, which was working for another company, I was a management consultant. But the reason I went into management consulting was because I just looked at it as a good way to see a lot of different businesses and how they work and understand what makes businesses successful and what makes others fail, and get to see a lot of different versions of that, with always an eye that I would take that experience and relate that to my own business once I figured out what my business was going to be. And so yeah, I think in some ways probably a little nonconformist. Now I knew I always wanted to start my own business, but in other ways, very, very much that kind of Midwestern Big Ten kid.
I love that. And you mentioned a few things there. You mentioned the entrepreneurial mindset, and that was always something that you had kind of growing up. And you also mentioned your experience as a consultant in observing what made some businesses succeed and what made others fail. So I'd love to dig into both of those concepts. Could you first describe what is the entrepreneurial mindset and how does that resonate with you?
Sure. Man, it's just real simple. It's this idea that you don't want to work for somebody else and that you want to be your own boss. I mean, that was at the heart of it. At the heart of it, it was the idea that, I wanted to be my own boss, but this idea too, that I wanted to build something. It was always about building something. And I always saw that as kind of the highest and best achievement, if you will, of, so what you go climb the corporate ladder in somebody else's company. You're just helping them build their dream. Right. I wanted to build my own dream. I wanted to, I saw it as like the most difficult thing. And then I've come to just realize in life that the things that are the hardest are often the best or the most fulfilling. And I think early in my life, I would shy away from difficult things. And that's something that's really shifted in my mindset, probably around college times, was just going after those difficult things. If something seems difficult, go after it. It's kind of like, what major do I choose in college? Well, the hardest one was finance. Okay, so choose that. Okay, what's one of the most difficult careers? Okay, management consulting. Okay, go do that. It's just kind of been a theme of where I've just realized that first of all, things that seem difficult are never as hard as they seem from the outside once you're on the inside,
yes.
right? And then those things though that are more difficult that not everyone is doing, like I said, often are the most fulfilling. And so I just try to kind of remind myself that it's not going to be as bad once I get in there, but also try to go after. I guess it's the same as stepping out of your comfort zone, right? Of like looking for ways to continue to step out of my comfort zone, and that's kind of driven my decisions in life and in my entrepreneurial career as well. But going back to your original question, this idea of being an entrepreneur, besides wanting to be my own boss and have my own schedule and time and things, was this idea of building something great, like building a great company, having employees that could rely on me and that I could provide for. Always was really appealing to me. I guess it's almost like kind of like this hero story, if you will, of being able to build this thing and provide for the community and do all that. That was always what I wanted, even as a little kid.
Well, and if you dig back into it, there's a lot of clues in this. And the reason why I loved your response there and your perspective was that, the more that I've learned is that human beings are designed to go big. And if we want to evolve and transform, and by the way, the only constant in life and in business is change, right? And so the constant evolution, it's always present. It's always relevant. And so evolving through a bit of discomfort is really the calling card that we're all called upon to step into that next version of ourselves. And as we do that, we start to live a life that, rhymes with a little bit with fulfillment. And I think that that's a beautiful thing. And you mentioned a few things there in terms of building something as well. I think there's something to be said about that clue as well. It's like when you build something, you can feel satisfaction around that. And I think we're almost designed to do that as well. So that's beautiful. And you're talking about, as you kind of stepped into doing more hard things and following these clues along the way, whether it was conscious or subconscious, you got into consulting. So I'd love to touch on that just briefly in terms of what you saw early on, in terms of what separated successful businesses from businesses that either failed or were just mediocre. Is there anything that comes to mind right now?
Yeah, there are. This is something that for a while I've been meaning to sit down and like really distill, but especially when I was in the consulting world, it was something that I would speak to executives about as we went and were consulting them. When you see like 100 businesses and you see what works and what doesn't, trends start to stick out, right? One of the biggest is you can't succeed if you're not going to delegate. I saw so many examples where, just too much control and decision-making was held at the top, and it was just choking the rest of the organization to be able to, the owner or the person, the VP, whoever it was just the bottleneck to success. So you got to be able to delegate, but to be able to delegate, you have to have strong standard operating procedures, and you have to have a clear org chart. And oftentimes I think those things get skipped. I mean, we were kind of talking about this just before the show, right? The need to step back and not just be in the business, but work on your business. And part of work you're working on your business has to start with clear role delineation and clear operating procedures, because only with those two things can you have clear accountability, which is what it's all about. How can you hold people accountable if they don't know what their job is and they don't know what they're being held accountable to, right? And so you have to be able to measure with key performance indicators. And that's probably the next one, is the ability to have defined key performance indicators that are easily measurable. Because I've seen organizations they've got a sweet dashboard with like 50 KPIs on it, but 15 of them, they don't even know how to measure. And so it doesn't provide a ton of value. They've wasted a lot of time creating this dashboard that really isn't even measurable. So honestly, break it down to like 2 or 3 things that really matter for each person that are easily measurable, and focus on those, and don't change them. Don't change the goalpost on people. And if you can do those things, largely you'll be successful. I mean, those are some of the main ones that stick out right away.
That resonates with me very deeply. And I think there's a lot of wisdom there, and a lot of, things that we should all consider in terms of how can we amplify our own delegation? How can we amplify our own clear communication, our own clear understanding of what's important? What are the key performance indicators that are actually moving things forward? So thank you for that. That's amazing. So go ahead.
So you made me think of one more that's super important. Context is everything. People need to know the context around their role, meaning, someone may be step 5 in a 10-step chain, but if they don't understand how what they do affects both what's happening downstream from them and also what's happening upstream from them, then they can't be effective, because they don't know when they push that button, what that does. Right. And so then they can't critically think about, well, should I push the button or should I not push the button? Right. So they've got to have context, but to be effective in their role. But 2, people want the context about their role. They want to know how they fit into the broader vision and the broader world and universe, because they want to feel a part of that. And if you as the leader, as the owner, don't provide that context, I mean, nobody else is going to, and people are ultimately going to be unsatisfied. People are so much more satisfied when they understand their role and how it fits into the bigger picture and the part that they play, and they're more effective in their role just by taking the time to explain to them. Like, I mean, I had so many consulting engagements where it was like, kind of assembly line type processes. And nobody ever took the time to explain, to the person doing step 1, how it affected step 10 down the road. And if, when you do that and you just that simple act can remove the variation from the process. And then the last piece of it for really going all the way is you got to have a feedback loop back from 10 to 1. So if something's happening upstream that's affecting 10's got to be able to tell them what's going on so that they can make the change. So
no doubt about it. And I would even take it a step further. If people understand how their, part of the process impacts, not only outcomes for the business, but also purpose beyond just the outcome, I think that there's so much value in that. And you think about motivation and intrinsic inspiration. I mean, there's so much value, and you can almost institute leadership within that entire process when you give context to, what's the purpose behind what we're doing. So that's phenomenal. So let's kind of switch gears a little bit and talk about the business that you've chosen. And obviously many of the listeners have chosen similar businesses in terms of being real estate investors. And obviously it's not a hobby, right? It's a business. And so that's why we've started this conversation the way we have. And I think that's so valuable. So tell me, why have you chosen multifamily real estate as the vehicle for your business? Tell me a little bit about that.
Sure. So I've done a bunch of different things in real estate, from flipping houses to I've got a small single and double portfolio here in Indy, bought houses on contract, holding the notes. I've done private lending, all kinds of stuff. But really that was all kind of figuring out where I wanted to be. Right. And, I landed on multifamily because multifamily really just checked a bunch of boxes for me. I mean, one, the scalability of it. I mean, if you do the math on building out a single family portfolio, you got to buy a heck of a lot of houses to ever get to the point where you can actually be financially free. And like the dirty little secret is it's pretty much just as easy, if not easier at times, to buy a 200 unit apartment than it is to buy a duplex. I mean, it really can be. And so one is just the scalability of it. 2, just from multifamily versus other asset classes like industrial, office, others, is the simple fact that people need a place to live. And there's no other option. I mean, we've proven that people don't need a place to work. They can work from their apartment. But they definitely need a place to live. And when you look at the supply and demand drivers in multifamily and just in residential housing in general, I mean, we are grossly undersupplied. The demand largely by millions outweighs the supply. And just from my days back at school with my econ minor, I know that when demand outpaces supply, econ 101 prices go up. Right. And so, I mean, that I saw the long-term trends. I saw the trends related to demographics, people renting for longer, housing prices increasing, all these things telling me that there's going to be demand for a long time. It's going to outpace supply. And then when you actually then dig into multifamily, and a lot of real estate in general, I mean, just the ideas of the ability to have cash flow, right, as part of your investment, which is really difficult to achieve in any meaningful way to the stock market. The ability to have diversification. So I already had a pretty large stock portfolio, but one thing we really didn't talk about was in 2015 I sold a business, and I didn't want to take that money and just continue to put that in the stock market. I didn't want to have all my eggs in one basket, and so I was looking for a place to diversify. I wanted something that was non-correlated to the stock market, meaning when the stock market goes down, it also does not go down. And then, you think about the appreciation, which just the returns on my investments have been anywhere from probably 2.5 to 5x annually, over what I would historically achieve in the stock market. And then last thing, the tax savings, and just the ability to have tax advantaged investments. And so for all those reasons, fell in love with real estate, and then really just became a deal junkie. Just love the chase and the hunt for the next property. I love the feeling like you found that diamond in the rough and you can see the vision for it. And maybe you found something that other people don't see. I mean, that's just, it's thrilling. I think it goes back to some competitive nature. It fills that need I'm not getting from sports maybe these days. Now I'm in my mid 30s, but yeah, it's just an adrenaline rush. It's a lot of fun.
I love that. So talk to me about what is, investing like a pro. If you had to, I know that this is something that you're passionate about is, obviously having an understanding of the drivers, right? And understanding from a high level why this thesis is something that you want to go all in on and enjoy that drive and really go after to be competitive and challenge yourself on a daily basis. But when it comes down to it, what does investing like a pro mean to you?
Yeah. So my tagline for my podcast is passively invest like a pro, right? And the idea there is that, and this is what I try to preach all the time, is that even as a passive investor, because I started out passively investing with others. I mean, that was one of the ways I started out in the multifamily and into syndications. I did that for 4 years before I did my first deal on my own. But the idea is that even as a passive investor, you have to continue to educate yourself. You have to understand the investments because you have to still be able to make a good decision on your investment. I mean, otherwise you're just going to get thrown into something and not know what you're doing and potentially, lose your money on for it. And that happens to people, unfortunately. So the idea is that I think passive is a misnomer. You still have to educate yourself. You still have to learn. And that's what I try to do on the show is try to bring people on, bring the pros on so that people can learn from them and understand, how do you vet a sponsor? How do you analyze a market? What do you need to look for in a submarket? How do you analyze a property? And oh, by the way, only after you do those first three should you ever look at the property, and get through that process and do it in the right way. And so I think it's just, with real estate investing, with any investing, but there's just this idea, I think, especially in real estate, that you need to continue to educate yourself and you need to really understand the nuances of the investments that you're making and not just, throw your 50, 100 grand at people and hope that it sticks.
Yeah, I couldn't agree more. I think the constant and never ending education, not only as an investor, but also the constant and never ending improvement is just so important in terms of how we're developing our own skills, our own attributes, how we're understanding more about our own blind spots and perhaps surrounding ourselves with others who can help us continue to evolve and we can help them as well. Yeah. So talk to me, when you think about education, obviously you're providing a platform that educates others so that they can learn more about how investing like a pro really is and how they can continue to evolve and educate themselves. But how are you educating yourself right now? Is it, obviously you're engaging in these type of conversations on a continual basis. I'm sure you're reading publications, you're asking other people. I'm sure you surround yourself with other mentors and so forth, but how are you educating yourself right now?
Yeah, I mean, all of those things. The progression of my education really started with like podcasts and books, and that was when I first got started. And then it went from there to conferences, and it was I was attending. I got 10, 12 conferences a year from like 17, 18, 19. And just in doing that, surrounding myself and building my network out. Right. And then I have a couple of paid formal mentors. I have two, and then I have several, actually three. Then I have several, I have like two real estate mentors and a mindset mentor. And then I have several unpaid mentors, which are just people that are farther down the path that I want to be on. And I think I've recognized that, I've got the ambition and I can bring some value to them. And we've just developed these symbiotic relationships. And then just continuing and beyond like just the mentors, then just surrounding myself with, folks like yourself and other syndicators. I mean, I talk to other syndicators all the time and just trade notes. What are you doing? What are you seeing? What's different? What are you doing differently? And what do you forecast? What's happening? So talking to them, I talked to I just had a call with my insurance broker. We had like a 2-hour call the other day where I just wanted to go through like, there's so much in insurance that I didn't understand. Like a co-insurance in commercial insurance is completely different than a co-insurance in health insurance. And I bet most people don't know that. And a co-insurance and health insurance, good. Commercial insurance, usually bad, means you don't have all the coverage you really think you have. So just things like that. Like I have another call set up with them to go through just contract language. And so I've gotten to the point where I'm starting to really like niche down into the things that like really matter, like legal and spending time with the attorneys, and insurance and spending time with those guys, and in these places. And then like construction as well, like really wanting to understand the construction process. I'm starting a couple of developments. It's my first time going into development. So I've hired someone as a consultant who's been in development for 20 years to help me through the process. And so I'm learning a ton from her as we go through, but like hydrology studies and topographic surveys and all this stuff that I didn't know about a couple months ago. You don't have to know about those things when you're acquiring buildings that already exist. When you're going to build new buildings, you got to learn. And so in many different ways, surrounding myself, I guess now you make me think about it with like these people with these niche skills that are really deep in these areas and just trying to learn something from each of them.
Hey guys, just a quick word from our sponsor and we'll be right back to the show. This episode of Elevate is brought to you by CF Capital. And you know how much I love real estate and how it can be a vehicle towards creating any outcome that you want in your life, which is really why we created CF Capital. It's a real estate investment firm that focuses on acquiring and operating multifamily assets that provide stable cash flow, capital appreciation, and a margin of safety for our investors, for our partners, and for the people that we serve. Our team leverages its expertise in acquisitions and management to provide investors like you with superior risk-adjusted returns while placing a premium on preserving capital. Our mission is to provide property investment and asset management solutions to help investors maximize their returns by investing in high-value multifamily communities. Our philosophy is that we can elevate communities together through this process. And I want to invite you to go check out cfcapllc.com because we have a free ebook that's called The Bottom Line, the 10 ways to increase cash flow in an apartment complex. And I want to tell you that this is a value-packed ebook. So I want to invite you to go check that out right now at cfcapllc.com. I think you're going to get a ton of value just from reading this, whether you apply it to your own business or whether you educate yourself further on what it would look like if you invested with CF Capital. So go check that out at cfcapllc.com. Again, that's cfcapllc.com. And enjoy the rest of the show. I'll tell you what, man, that really resonates with me because every time I learn something new, especially in real estate, I realize how much I don't know. And like when I spend time with our attorneys or our insurance broker, like you just mentioned, I mean, my mind has been overwhelmed with things that I've learned about, not only the current volatility in the insurance market, but just all the different moving parts in terms of how our, policies are quoted or how we structure sort of binding policies. And I just think that's so valuable. And I think about, Rich Dad, Poor Dad as an example. He mentioned his poor dad was learning things, in school or from a book or from someone who maybe has never done what he wants to do. But what you're describing is surrounding yourself with people who are actually doing this, who are actually supporting others in achieving their goals, whether it's from a legal perspective or all of these other different vantage points. And I think about it too. You mentioned, sharing just conversations with other people, other investors, other syndicators. The words that came to mind for me was, this is an open book test. It's not like you have to remember everything and you better be able to do it all on your own, because it's so great that we can all share experiences. We can all share failures. We can all share triumphs. We can share notes to say, hey, here's what's working in this market. Even if we're operating in the same market, the abundance mindset is so relevant. And so with that said, with this being an open book test, let's dive into that a little bit. Let's talk about some of your perspective so that the listeners here can take their investing to the next level. So let's talk about one of the things that I think is really valuable or really insightful from your perspective is effectively evaluating deals or opportunities, right? I'm sure what you guys are doing more so than anything is looking at deals and probably saying no to a very high degree. Obviously, you and I were talking before the show today. You're in the midst of closing 2 deals. I'm sure many did not pass the stress test to get to this point. So talk to us a little bit about how you evaluate deals. You obviously have your target markets, but when a new deal crosses your desk, walk us through the process.
Yeah, sure. So you're exactly right. So I used to feel the rule of thumb, which I heard from others and then kind of lived in my own life, was like, you have to look at 100 deals to maybe put an offer in on 10 and win 1, right? Now I feel like it's more like 120 or maybe like 150 deals as prices have just continued to move upward. And because of that, you have to be really efficient. I think that like a lot of beginners I talk to are like, well, they're always amazed when I tell them like how many LOIs we're putting out in a week. Cause they'll be like, oh, I put an LOI out like last week. I'm kind of waiting to hear, I might put another one out. Like, that's not how you play this game. It's really a volume game at the end of the day. And you have to be evaluating hundreds of deals to find those few that are going to make sense for you. And so the way you do that is, I call it like the Tinder swipe at the beginning. So, you either like it or you don't. So I go through, so we'll go through I'll meet with my underwriter. And we'll go through, and there's criteria that we have now defined where it's just certain markets we don't want to be in. So first of all, it's like, is it a city that we want to be in or not? Right. So that's real easy. Then is it a vintage that we'd like? Like, I don't buy anything older than 1970. Don't like to really buy anything older than 1980, but if it's 70s, I'll look at it if it's a special situation. And then we don't buy A or D classes. So in having those criteria, it's really easy to say yes, no to deals, right? And then it kind of goes to the next step. Okay, if it fits those steps, if it's a market we want to be in, it's the asset class we like, it's age we like. Well, is it in the neighborhood of that market we want to be in, and that's where we actually move into doing some analysis. And we start with demographic analysis. So, okay, what's the median income in the area? What's the crime? How close is it to an interstate? What are the schools like? What's the retail like in the area? And we can do that, in a matter of like 10 minutes and I can understand all those things. And then that's the next thing. Okay, nope. Yes. Right. Move on to the next level. And then and only then do we actually like open up the deal materials and it's like, okay, now let's get in the rent roll and let's get into T12. And then the way that I've paced it out is there's a couple levels even through that to kind of say, again, yes, no, yes, no. So we're being very efficient because I don't want my underwriter who does the first pass on everything wasting time on a deal that was dead from the start, right? And have to go through because it takes a few hours to fill out an underwriting model. So I've been very mindful about building these kind of breaks in the process where there's these decision points that need to happen to where if the deal is going to continue to move forward or not.
So if it passes the test at that point, you go through the underwriting process. I'm sure you've got certain metrics that you've got to hit, for a deal to make sense. And obviously you have the expectation that upon touring the asset, you're going to need to nip and tuck some expectations or assumptions and so forth. And I would imagine from there, it's about touring the asset. It's about having a conversation with the brokerage team or with the seller to understand motivation and so forth. Maybe I'm making making some assumptions there, but is there any part of the process that I'm missing?
No, that's right. I mean, it comes down to, can we, so the way I look at it is I don't care so much about going in cap rate because, the cap rate could be a 3 cap, but if you can raise rent $350 as soon as you take over, it doesn't really matter. I care way more about the exit cap, and even beyond the exit cap, what is a realistic exit price per door? Like your model can tell you whatever you want, but if it's telling you got to sell something for 170 a door when nothing in the market's ever sold over like 120, that's probably not going to happen. And so that's where you got to start to bring reality and start to cut those things down, right? But in making all these assumptions, right? At the end of the day, I look for can we hit a 15 IRR over a 5-year hold? And that's like my baseline. If I can't do that, I don't even want to look at the deal because I know it's not going to be very attractive for my investors. At the end of the day, it's can I hit the returns that I know are attractive to my investors? And if I can do that with reasonable assumptions, then I feel good about the deal. And then when we go to tour the deal, it's more like, okay, just make sure if they say all the roofs were done, like there's not shingles falling off, make
right.
sure like validating what we've been told. But I don't think I don't getting on site. Well, okay, I take that back. It's happened one time. We were looking at a deal and it turned out that it was, they had crawl spaces. We didn't know they had crawl spaces and the subfloors were like walking on a trampoline. But most of the time, by the time we've gotten to that point, like unless something big happens like that, like we're already very comfortable with the deal. We've already put a lot of cash cushions into the reserves. So we reserve for very specific line items of what we know, but then we also just put big cash cushions just in there for other stuff, right? Whether it's a 10% contingency on the renovations, whether it's working capital reserves, whether it's just reserves for items that we think might happen. So if I'm going to acquire a property where the roof's 25 years old, I'm going to put a roof reserve in there. We may not ever use it, but if we need it, we've got the money set aside. And so we do all that. And knowing that and going in, if we're still competitive in the deal, I know, and I really try to communicate this to the seller as well, that we shouldn't have to retrade on this property because we've already accounted for everything and we put extra cash cushions in for what we find going through that process. And that typically makes us I think a more attractive buyer than someone who is coming in razor thin and going to try to, change the price on them once they get under contract and get into the process. So we do as much as we can up front. I think we've got a pretty defined process. I'd say the thing that we're struggling with, which was when I talk to a lot of other syndicators right now, they're struggling with as well, is just adjusting kind of historic expectations to what's happening into the market right now. Where, okay, you may historically underwrite for 3% rent growth. Well, every market almost in the country is beating that right now. I mean, Indianapolis, we're seeing unprecedented growth. We're seeing like 9% year-over-year rent growth this year. You have other markets like Las Vegas that have seen like 20% year-over-year rent growth this year. So are you going to win any deals underwriting the historic 3%? Probably not. And so you have to start, really where I'm spending a lot of my time is, okay, how aggressive do we feel we can get? Because I'd say I'm relatively conservative. I know everybody says that, but really have been historically. But how aggressive can we get? How comfortable, do we think rent's going to rise 4 or 5%, for how long? And therefore, how much are we willing to pay for the property? And I think it's that balance is what's going on right now for a lot of people as rent has increased and prices have increased so much.
Yeah, I think that's really well said. It's definitely challenging to predict, where the market's going to be in 5 years. I mean, you just mentioned in terms of cap rates, in terms of rent growth, in terms of price per unit. I mean, there's so many different things that are being sort of or evolving in the current environment, and that perhaps could continue to evolve, or in the next year or two, we could be experiencing vastly different set of circumstances. But I think it's valuable to think about probabilities. I think it's valuable to consider certain scenarios and how do you mitigate that risk? How do you cap that downside in the event of certain assumptions not playing out? But I think ultimately, this conversation is very valuable for active investors or passive investors, because you mentioned it earlier. it may be a misnomer to really kind of, categorize passive investing, because I think at any moment where you're committing capital to an opportunity, whether it's with a company like yours, Kent, or, a company like ours, you've got to understand, well, what are the assumptions at play here? And what are we assuming the future marketplace to look like? Because ultimately you or I, we can make a 15% IRR, work on any spreadsheet, no matter what. It's just a matter of, is that realistic? Is there anything else you would add to that?
100%. Yeah, no, I'm really glad you made that point, is that it's all about the assumptions, it's those key assumptions. It's, and a lot of yes, it's about that. And then one thing to look at, in just as I just had this thought, in a lot of models, the exit cap rate is a function of whatever the going in cap rate is, right? And so you set it to expand by 10 basis points a year. And what people don't realize is, like, in a model that's built like that, the lower the going in cap rate, actually the higher the returns are going to be. Right. And so you actually, as you add in expenses and things, and as you decrease that NOI on the front end, it actually increases your returns on the back end. And I think people miss that, in that you need to make sure that, in all ways, your assumptions are valid, and that you are, especially, the biggest mover is going to be your exit cap rate, right? That's the thing that's going to change your returns. I think they'll have the largest swings with the smallest little tweaks. And so I think, as an investor, looking at, okay, what exit cap rate are they expecting? What per unit price are they expecting to sell for? Right. How much are they expecting that rent's going to grow? What's the what bump are they going to get on renovations? What are they expecting? And does that make sense with their rent growth? Their like natural rent growth expectation, right? Like, are they capturing all that rent growth on that bump, or is there still some left to be had naturally over time? And expense growth expectations as well, but people are usually more tempered there, I feel, than in rent growth. But those are the big things. And then I guess loan assumptions, right? Interest rate, but interest rates are pretty low right now. And I don't think there's a lot of risk of those spiking in the near term. But yeah, just looking at those assumptions and really asking yourself. And that's why the education is so important, is because you have to have context to be able to say, okay, in Nashville, is 5% rent growth possible, or is it not? Is it reasonable? And if you don't have that context as an investor, you're not going to be able to make that decision.
Exactly. And how do national politics, international geopolitical moves, and economics, and, interest rate risk, and all these different things that you mentioned. What type of context do you have from a very big picture, as well as how does that impact this particular submarket? How does this impact our occupants today and occupants tomorrow? I think there's so many different factors to realize. Ultimately, over time, you integrate this context into making gut decisions and making decisions based on your intuition, and understanding that, of course, you can never predict the future 100%. Like the cap rate debate, I call it the age old debate. It's like you put your finger in the air and you feel which way the wind is moving to say, what's our exit cap rate? Because we don't know. But at the end of the day, you have to make probability assumptions. So this is super valuable. Go ahead. Do you have something to add to that?
Well, I was just going to say, I think as an investor, you have to understand what the worst case scenario is, and you have to be comfortable. You have to be comfortable with that.
Yes.
And okay, maybe the worst case would be you lose all your money, right? But outside of that, I would say, like, a reasonable worst case scenario would be like, okay, maybe my most likely, because that's what I would underwrite to, would be that 15 IRR. But in a worst case scenario where maybe occupancy drops 20% and we can't grow rents and things, and maybe it's a 5 or 6% return, right? But context, in that environment, we're probably in a recession. The stock market's probably gone negative, right? So in that environment, is a 5 or 6% return that bad? No, you're feeling pretty good about that, right? If your stock portfolio is heading into the red. And so I think, as an investor, if you think about, it's easy to focus on the big shiny thing over here. And that's usually the annualized return people put out because it's higher than your IRR. But also think about the downside and think about, okay, like, what's worst case scenario based on their assumptions? What's their break even occupancy, right? And what does this deal look like if they don't raise rents? if they can't raise rents. And I think if you look at those things and say, okay, I'm still comfortable with that return relative to the environment we'd likely be in, then that's still a deal that you could be comfortable doing.
Such a valuable way to look at it. And what a great way to explain that and make it easy to understand. Kent, what role does mindset play for you in your not only entrepreneurial success, but investing success as well?
Mindset's everything. Mindset's everything. I work really hard on my mindset. I spend a lot of time, and you have to spend a lot of time. It's something that you're constantly curating. I meditate every day. Just did a little 5-minute meditation before this podcast. I try to do one before every podcast because I've got because before this podcast, I was on 5 straight calls with surveyors and title companies and everything else. You got so much going around in there. You got to bring it down and settle. And so, the meditation is huge. I've recently picked up yoga, which has been fantastic because it's like physical exercise plus meditation built in. But that goes a long way to mindset. And then, I think just surrounding yourself with people that have not necessarily a positive mindset. Positivity is great, but you have to also be realistic, right? But just people that are, Tyler, you probably have a better word for this than I do, but just people that are that are constantly wanting to expand and grow, right? Mm-hmm. Versus,
growth mindset.
Yeah, growth mindset. Because I've got people that are, that I've been close with for years, maybe, but we just don't really jive anymore because we've got kind of a victim mentality. Whenever we meet up, it's, my boss is doing this or this is happening to me and blah, blah, blah. And, if you surround yourself with those people, you start to think like that. And so I think that surrounding yourself with people that have the mindset that you want to have, I think goes a long way with being able to achieve that mindset. And in some ways it can be a fake it till you make it type thing. You act that way and all of a sudden you are that way and it does work. And so, but I think mindset is critical. You got to believe in yourself. And I think it goes back to what I said earlier about the idea of changing my mindset to actually, I used to shy away from the difficult and say, no, I want to, stay over here in my comfy little box. And just that shift to now, this feels kind of uncomfortable. Well, maybe I should pursue that. Maybe I need to go after that, right? Like, you've never done a development before. Well, let's build 150 units. Let's go. Let's try that out. Cause you're going to learn a lot along the way. And so, I think without the right mindset, I wouldn't be able to make those leaps.
Yeah. It integrates in everything, in all of our decision making, all of our behavior, whether it's conscious or subconscious. And that's why I just thought it was such a, important question to ask you because, earlier part of the conversation in many ways was a very sophisticated way to understand and integrate many different moving parts in terms of assumptions, in terms of, moving micro and macroeconomics and all of these different things. But if we don't have the appropriate mindset that says, hey, if I try, I'm either going to win or I'm going to learn, then we may not ever take action. And this is not easy, but guess what? Easy may not be the path that we should be taking. Maybe hard is the path that can allow us to expand. And there's so much more beauty on that path and on that journey as well. But Kent, man, this has been an awesome conversation. I appreciate you so much. And I want to transition into our rapid fire section. We call it the rare air questionnaire. It's all about being uncommon, right? It's not common to choose the hard path. It's not common to choose challenge and to really focus on mindset and prioritize how you're thinking and how you're behaving, but also prioritize your learning and your education. So this conversation has been phenomenal. It's been fantastic. I want to ask you a few additional questions before we wrap today. Ken, if you were to point to 2 or 3 of the most impactful books that you've read over the past few years, what would those be and why?
Oh yeah. Good question. I think books are so important. You guys have to be reading. If you're not reading, you got to start. And even if you're just reading 5 minutes a day, that's good enough. It's better than nothing. You don't have to sit down and think you're going to read for 4 hours. I got 3 kids, so I never do 4 hours of anything all at once. But if you can just read a little bit, make sure you're doing it. One I actually just happen to have right here as I'm rereading it for the umpteenth time is Think and Grow Rich. That's like it's the OG of mindset, right? Like it all started kind of there. And then if you read that book and then you hear what a lot of the guys that talk about today are saying, like it came from that book. And so I think that's critical. Another one that's a little more recent It's a book by a guy named Adam Grant called Think Again. And that book I just really read that at the right time because we were just talking about assumptions, right? And that book is all about challenging your assumptions and changing your beliefs based on learning new information and how, we're taking in so much information every day. And we constantly have to be evolving our belief systems and our assumptions based on that new information. There's an awesome quote in it by Ray Dalio where it's like if you can't look back a year from now and say, wow, I was really stupid last year, then you haven't learned very much, And so I really like that. It's like, yeah, you should be learning so much all the time, but while with that learning, don't be like your being is not tied to your beliefs. Your worth is not tied to your beliefs. Your beliefs should change as you have new information. I just thought that was a really simple but like novel concept. And as we've been talking so much about assumptions and how you have to change, I've really kind of looked back to that book as a driver.
That's awesome. We'll put links in the show notes to both of those books. And, it actually makes me think, I'm sure you feel the same way, Kent, with doing the podcast. If I listen to an episode that I've done 6 months ago or a year ago, it's like, I kind of cringe a little bit, but probably that's a good thing, in many ways, right? We have new information and we can expand and evolve. And so that's phenomenal. Thank you for that share. And by the way, I'll just mention this as well, because you mentioned Think and Grow Rich. I mean, one of the quotes that just continues to resonate with me from Napoleon Hill's work there is what the mind can conceive and believe it can achieve. Mm-hmm. And ultimately, if you can understand that and integrate that into your being, it's amazing what can happen in your life. So I just had to mention that. So Kent, aside from our discussion today, what's the biggest way that you elevate your life on a daily basis?
Man, I think it's got to go back to just my kids and spending my time with my kid. I mean, this is my favorite thing that I do. I mean, and they're why I do what I do. They're one of the main reasons that I got into real estate and got off the road as a consultant was to be able to have that time with them and have the freedom to be with them. So they recharge. I mean, sometimes they drain my batteries, but they always recharge my soul, I guess you could say. And so, and man, if you just look at things the way that kids look at things, you're always amazed and you often realize like the stuff you're worried about just isn't that important.
Man, that's awesome. Thank you for putting that in perspective. And I can imagine you're a phenomenal father. Kent, what's the biggest way that you elevate others around you?
Man, a couple ways. So one is, I really look at what I do as offering an investment opportunity to folks that traditionally wouldn't have the ability to get the returns that they're able to get with my investments. And I don't really mean that as a sales pitch, but it really is part of my mission with the company is to like real estate investing for me started out very personal. It was about, how can I build my wealth? And as I learned about syndication and saw the power there and had the impact on my own life of being in these investments, I realized that I could bring my entire community up, right? I can. And so I have friends, family, old coworkers, all kinds of people now that are in these deals and just so happy about the returns they're getting. And I mean, one of my favorite stories is like, I've got a guy who's a friend of my father-in-law. And before investing in my deals, he had his money sitting in CDs and in a bank account because he's super conservative. And he's looking at the returns. He's like, well, okay, I'm making 0.1% over here. So if you can do better than that, like you can have my money all day. Wow. But it's just been it. And he's retiring this year. And so I think it's been life-changing in ways for him to be able to just have that opportunity. So I think that's one way. And it really is part of the mission with the company. And then the other is just, I spend a lot of time talking to other people. I don't have like a formal coaching program or anything, but I spend a lot of time with newer investors, answer a lot of people's questions. I try to make myself available because I had so many people step in at the right time and give me great advice. And I'm trying to return the favor. So I'm trying to elevate the folks around me to learn from what I've learned.
Kent, man, I want to acknowledge you for your authenticity, your continued commitment to challenging yourself and other people, to face discomfort, to learn more, to grow, to take risks, to take opportunities and grab the bull by the horns, man. There's so much more that we could have really gone down in terms of this conversation. I'll plant the seed for part 2 because there's really so much more that I'm sure that we'll dive through at that point in time. But Kent, I know that the listeners can find you at kentritter.com. Of course, they can also find you on LinkedIn. They can find you on Facebook. They can find your podcast, Ritter on Real Estate, wherever podcasts are heard or watched. They can find you on Instagram, Ritter on Real Estate. Is there anywhere else that I missed where the listeners can find you?
No, I think hopefully that's enough places that they can reach out to me if they're interested. And please do. I'm very easy to find, and I enjoy talking about real estate. So, it's definitely not a burden. It's my favorite thing to do. It's why I do this podcast and why I do my own podcast. Right. Please reach out, man. I think you hit them all.
Love it. And of course, if you visit his website, there's also a freebie there on the website. The 4 things to look out for in a syndicator before you invest. So this is just another part of stacking on education. So I think that's super valuable. Kent, is there any parting thoughts or words of wisdom that you like to share with Elevate Nation today?
Yeah, man. Now that I have the opportunity, one of my favorite, doses of wisdom for folks is, it's not about being perfect. Like if I was going to wait to start my podcast until it was perfect, I'd still be waiting today. It's not about being perfect. It's about getting started, and it's about improving through iteration. Just little improvements all the time. Like I used to tell people that reported to me when I was a consultant was, look, I don't expect you to be perfect, but I expect you to do it better every time. And that's really what it's all about. And so if you're sitting on the sidelines, just get started. That's the way you're going to learn.
Man, that's amazing advice. Kent Ritter, thank you so much for being on the show, my friend. I look forward to seeing you soon. Elevate Nation, what a phenomenal episode with Kent Ritter. I don't know about you, but I learned a lot. I hope you learned a lot. I learned a lot, not only about thinking, about exploring opportunities, about evaluating potential futures, and really understanding and thinking again about the way that we believe certain things to be and how we see certain things and how that relates to success in real estate. I think it's so valuable for us to understand this vehicle intimately and continue to expand that understanding, continue to evolve and challenge ourselves to learn more. Because if real estate is going to be a vehicle that serves greater outcomes that we want in our life, we have to continue to learn, whether you're active or passive as a real estate investor, entrepreneur. It's just so valuable for us to get back to the center and learn that learning is the center of our success. And it's also the center of fulfillment in our life. And so I just want to thank you so much for being here. I want to thank you so much for listening to Elevate Podcast. I want to encourage you to re-listen to this show and identify what are your top 1, 2, or 3 key distinctions or takeaways from this episode. Repetition, of course, is the mother of all skills. So listening again, you're going to learn something new. And of course, just discuss this and share this with someone else, share this with a friend and discuss with them what you learned from this episode. Was it something to do with the mechanics of real estate or making assumptions on certain deals and growing your business and understanding what separates success from failure? I mean, there's so many different things that you could have learned from this episode, but the most important thing is to discuss that and expand your learning through those discussions. And of course, by far, the most important thing to do is to take action. So I want to challenge you to take massive action. Until next time, Elevate Nation, thank you so much for tuning in, and we will see you next time.
Thank you for listening to Elevate. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to elevate your results by taking immediate action on what you learned. For more, visit elevatepod.com.